What's up, everybody? Welcome to the Stocks channel. Today we're going to do very exciting technical analysis of the stock market. And first of all, we'll look at SPY, which did close the gap today at 562. And we now have a very low risk opportunity for the bears from the previous all-time high and the gap fill that if they are going to show up, it is now very low risk to short this market, which, as I've said many times, low risk does not mean you're going to win. It simply means if you lose, you are not going to lose a lot of money. And that does mean it is very likely going to also be low probability. So if you're trying to short SPY here or just looking for the market to go lower, the possibility here is that we could get rejected from this gap fill at 562 and then come down here towards the rising 20 daily moving average and a gap fill right around 545. Now, as I said last night, I am currently viewing this as a trading range between 556 and 565, which means while we are in that range, I do not think the market is going to have any drastic moves out of the range unless we can either get above 565 or below 556. So it is completely possible that if you want to short, you simply wait for a break of that support, or if you want to go long, you simply wait for a break of that resistance. Now, while we're in the range, this has been great for day trading. Today was a very solid day of day trading, with plenty of volatility and price swinging rapidly in both directions. So whether you're going short or long within this range, you should be doing very well. But for swing trades, I do like this low risk entry for the bears, and that does mean bulls will also identify it as an opportunity to lock some profits. So now, even if we are going to an all-time high, I will not be surprised if we do some sort of cup and handle pattern where we build out the cup and then build the handle and then get the bull breakout later. Or in an extremely bearish scenario, we just start crashing back down and we go do some unfinished business of hitting that 200 daily moving average and close that gap down there below 506. So I am open to many possibilities here. It is an election year and we are getting into the election season volatility, which is going to be very exciting for trading. But you just need to be very objective here because you do not want to get married to any ideas. And it is very easy to get married to an idea. You simply start entering a trade and then you start liking that trade more and more and more until you can't possibly imagine the market doing something different. So do not fall into that trap. I am completely open to the idea that the market just blasts off and goes straight to new all-time highs and leave the bears in the dust. But I am also completely open to the idea the bears have a very nice low risk entry here and are going to short the market while the bulls sell, and we are going to get a pullback. So be prepared for both of these. I do think the market could be considered a coin flip here. You could say either of these is 50-50, and I think it's very hard to argue that it's not. However, with the low risk, you typically do have the low probability, so we do have to say the bulls have a little bit of the advantage of the doubt here because we do have a bull trend and this is a bull market. But that does not mean the bears can't take a win here, and that does not mean the bulls can't take a loss here. I will not be surprised if we get this pullback, and I'll probably even go ahead and say this is my preferred scenario, so I'll leave the one arrow on the chart. If we're wrong, you need to take your loss at brand new all-time highs, which will be the break above 565, and if we're right, we could see a nice little bit of a pullback here, which could be a nice profit for a short trade. So watch that level very closely. We did fill the gap today at 562, so the only gap remaining now is down here right at 545, at least within recent price action history. We do have gaps to the downside that are from previous months, but again, we're just looking for short term here, and if the bulls are going to hold support, that is going to be at the rising moving averages. So this is the perfect time for a pullback, which doesn't guarantee we'll get it, but it is a good chance and it is something to consider for a trade. So 556 is that critical support. If we break below it, look out below as people get risk off, and that means we could see a little bit of high volume panic selling. And also, while we're talking about volume, as you can see, the volume is dropping off. We had that high volume on Monday's low, which could have been a bottom. And ever since then, we're just getting that low volume melt up, which is completely normal for a bull market because they climb the wall of worry. Once the sellers dry up and there's no more sellers, that means you're only left with buyers, and that means the market starts to melt up. On the NASDAQ 100 triple Qs, we were up 0.47% today, and I do think we're getting very close to the top of this range at 485, which means just like SPY, I think there's a very good chance we could get a pullback soon from 485 down to fill a gap at 465. But if we get the bull breakout above 485, then we will be looking for a gap fill at 493. So do keep that in mind. The bull breakout is very close, so if we get it, respect it, and that means we're going higher to 493. Above 493, we have the previous all-time high at 503, so play it day by day and level by level. But do keep in mind the bears see a very low risk opportunity here, so below 485, it is possible we pull back, and the critical support is 473, and if we break below 473, we should easily fill that gap at 465. On the Dow Jones, we were up 0.11% today, and the Dow Jones is still sitting right here at this very critical resistance trend line, and from here, again, a very low risk short opportunity down towards a gap fill just below 401 using this resistance right around 409 to 412. But do keep in mind, if we break 412, we do have a brand new all-time high price target at 420, which is going to look extremely likely if we can get to a brand new all-time high above 412. So again, very obvious risk levels, a 50-50 coin flip if you want to view it that way of going higher or lower. Let price do all the talking and just be prepared for both of these scenarios, and then trade the one price is allowing you. If you want to wait to short the Dow, wait until it can break below 407. On the Russell 2000 IWM ETF, we were up 1.3% today, making another higher low, higher high, which means we will likely test this breakdown right around 217. But again, if we cannot break above 217, this is a very low risk opportunity for the bears and the bulls that want to lock profits, and we could see a rejection from this resistance, and that means we could break the support at 212 and then come down here towards a gap fill right around 208 to 209. So pay attention to this. A lot of these charts are giving the bears very low risk opportunities, which could turn into self-fulfilling prophecies. On the VIX, we were up 2.46% today, so the VIX is rising while the S&P 500 rises, so we're definitely getting more hedging and more fear beneath the surface, because if you're not paying attention to the VIX, you probably didn't even realize it was rising with the S&P 500. And if at any point we get some panic, which could be coming, it doesn't take much to spook a market that just had a V-shaped recovery, and you can see extreme sentiment shifting from extreme bearish to now extreme bullish. That is a perfect opportunity for the market to get more volatile, which will not surprise me if the VIX starts to spike out above 20. Watch it very closely because the VIX is rising with SPY, and that is typically a sign of fear and caution. On Bitcoin, we are currently trading right at the top of the range, just below 61,600. And if we break above the top of this range, you cannot view that as anything other than bullish, and it means we will likely go to 65,000. Now, one thing to pay attention to is that Bitcoin is below the 200 daily moving average, which is typically a bearish sign. And the last time we got to the 200 daily moving average, we did see a rejection. So I would also not be surprised if this was a bull trap at the top of the range and we got a rejection back down to the bottom of the range. So wait for that bull breakout for confirmation. But if we did get that bull breakout, it is undeniably bullish, and we will likely see buyers up to 65,000. So wait for the breakout. If we get the breakout, you can definitely chase it, and you could definitely look for higher prices. On Nvidia stock, we were up 0.98% today, and as I talked about last night, we were breaking above the resistance trend line, and I told you as long as we could stay above 126, there was nothing wrong with the chart, and it was looking bullish for a new all-time high. So again, as long as we're above 126, it is looking bullish for a new all-time high, and that is definitely something the bulls can hang their hat on. If we break below 126, I think it is instantly risk off, because we could come back down towards 117 or 109. So watch 126 very closely. That's my favorite risk level. Above it, stay bull. Below it, get risk off. And that does mean you could short it. And this thing does have earnings up next week, and that is obviously going to be a very large catalyst. And I usually don't trade stocks close to earnings, so this is definitely something I'll be watching and not trading as much. But if you do want to be bullish or bearish, use that line in the sand at 126. On Tesla stock, we were up 0.98% today, and we're still above all the moving averages. We are building up that bull trend, and I'm going to remind you that above 211, you can stay bullish. And while we're above 211, I do think there's a good chance we could go to at least 245, but likely even higher. So above 211, I'm liking Tesla as a bull. It has the bull trend. It has the bullish price action. The next critical resistance is right around 230. On Apple stock, we went absolutely nowhere today, but we still have the bull trend. We still have price action above all the moving averages, and we still have a gap to fill at 232. So even if we get a pullback down towards 217 to 218, I do think that is a buying opportunity. However, we'll need proof that that support holds, or we are just going to go straight now to the price target and fill the gap at 232 without a pullback. I'm fine with either of these scenarios, so watch that 5 daily EMA. 225 should be a great support above it or below it. If we break below it, look for that higher low pullback. If we hold above it, look for that line straight to 232. And then very quickly, we'll review the financial sector. And as I've said before, we're knocking down the door of a brand new all-time high, but we may see this pullback towards 43 to fill the gap first. So keep this in mind, because this does favor the fact that the bears have a low risk short trade, and that means we could get a pullback before we go any higher. So jumping back over to the S&P 500, this is a great time to be very neutral. We are stuck in a range. We are about to break out of this range, and will likely break out of the range by Friday. I think you should be prepared for a bull breakout or a bear breakdown, and then be an unbiased price action trader that simply reacts to the price breaking support or breaking resistance. No emotions, no bias. Couldn't care less as traders if we go higher or lower. We simply want to make money and be on the right side of the trade. You have great risk levels here that I gave you across across the board, especially on the indices, manage risk from those levels, and understand both of the scenarios, and then just let the price action do all the talking, and you will absolutely crush this market. That is what I'm teaching you to do each and every day on the Stocks Channel Discord server. So if you want to come crush this market with us and get access to all of my technical analysis, my intraday updates, and my trade ideas, that is going to be in my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.